So good morning to all of you. This is Ranjan from Smart Finance, and this particular video is about the adjustments in the option strategy. So when I talk about the adjustment in the option strategy, normally adjustments are of two types. One is of pre-adjustment, another is post-adjustment. Pre-adjustment is a technique which we put along with the strategy. When we take the strategy, that time itself we do the adjustment. Post-adjustment is a process where we initiate a strategy or tweak the strategy based on the outcomes of the existing strategy, if it is against us or it is unfavorable to us. In both the cases, we go with the adjustment. So when you talk about the option adjustment, there is no book you will find out in the market. Even though if you get some books, mostly all those books will be on the vague concepts. They never talk about the subjects. Maybe it will be an individual experience or anything, but nothing is so far documented on this subject. However, I have started documenting all this process through my experience, what I did in the past many years. So compiling that, I have just categorized those adjustment processes and started documenting it. So maybe in my future edition of my book, you will find an in-depth study on those adjustments. So I'll just give you one brief outlook of the adjustment process. So to understand this adjustment, I'm just taking one model strategy. So strategy is very simple. So I am buying a future. So say Bitcoin future I am buying. I am buying a put option 96,000, which is very near to this. One OTM put options I am buying. And along with that, one 97,000 call option of 8th May expiry I am selling. So this is my process, or this is my strategy I have taken. So this strategy having two probabilities. Maybe the prices will maintain above 96,000 or price may fall below 96,000. So here in the put options, I am just spending $3,689 and through call sale, I am recovering some $553. And from here, the spot 297 strike, I am having another 650. So 1100 to 1200 theta is there. So that theta, I am just, if it is maintaining or going near to 97, I will be getting 1200 points of theta. And this 3689 is full theta. So that will be a loss factor. So every day proceeds, if I manage to get this 1200 out of that 500, 600 or 800 average. So after a couple of days of continuing the strategy, I can recover the cost of the put option. So this is just a simple strategy. So just to understand what is the adjustment. So types of adjustment as documented by me. So this you won't get in the book, you will tell that which book it has written. So as I said, there are no books on the adjustment till date, because all those adjustment principles, whatever they have given, that is based on the vague concept which nothing to do with the strategy. So here, within a very broad and very calculative mindset, you have to read. Because what happens, we study something, anything on options, anything on futures, anything on any subject, after few months or few days or after few years, we became the slave of our own experience. So here, just keep this, my words in writing. We became the slave of our own experience. Slave of our own experience says, whenever we study certain things, rely on certain things, or started believing on certain things, that belief becomes a habit, or the belief becomes so strong that we could not able to break that belief, so we became the slave of our own experience. So it is a broad philosophical subject. What is a habit? So anything you repeat every day, it is a habit. Intentionally or non-intentionally, it is a habit. Anything you repeat. Somebody says that waking up in the early morning, brushing, these are the habits, because this you are repeating from your birth. Somebody said the smoking cigarette also is a habit. So that is what happens. He repeated the action of smoking a cigarette every day. So that became a habit. So these are the things, experience or habit makes us to, or we become slave of that. So that distinguishes between another 4 to 5% of the people, those who do not fall in that trap. So that says that they do not take experience as their final outcome. They said that something more is there. This experience is nothing but just a actions process, the end result of an action, but the actions may be many. Actions may be infinity. Actions have many directions. I have just explored 4, 5, 10 directions, but maybe another hundreds of directions, thousands of directions are possible, which I do not know now. So that process makes you the adjustment. So that is where your adjustment comes into the picture. Mostly the adjustment is a process plays with your experience. So again I say, when you go with the adjustment, you should not be slave of your own experience, or you should not be the slave of your own habit. These two things will not go parallelly, and if it goes, you cannot do the adjustment, because everything, whatever comes in front of you, you justify that this is correct. Everything which does not satisfy you, you will think that it is a mistake. So that is why adjustment is a very critical and very difficult process. Same way your option strategy. Option strategy is not a easy job, or it is not a joke. It is not a field to be played by the players or the traders, those who do not have one flexibility in the mind, or the flexibility in adapting the new things, or having restriction or strong aversion towards learning. Those people cannot do the option strategy trades, because for them everything will be visible in terms of success or failure. They cannot think beyond that. There is a parallel thought, one hidden thought, which is beyond success or failure, that will not come to their mind at all. So for that reason only, adjustment also similar kind of process. Do not take this learning of adjustment as your final destiny. This is just the idea we are documenting. That is why. And a very famous say is there. Very famous say. Many of you, those who are knowing about our Indian scriptures, philosophy, or anything, you will be knowing the sage Vasudev has written Bhagavad Gita. So it is, whatever the narration comes, Bhagavad Gita was written. He's the Veda Vyas, means he also written many Upanishads. He has splitted the Veda, which is not able to understood by the common man, into different places, different ways, and many things. But he was dissatisfied. After writing all these hundreds of scriptures, or documenting those scriptures, simplifying those scriptures, he was not satisfied. He was not satisfied at all. Then there is a say comes, the Narad came and told him that why don't you write the life of Lord Krishna in Bhagavad? So he has written Bhagavat. So these are the qualities of the learning. This thing says that if he has already translated the Vedas at that time, so nothing is left out for him. He knows everything. But why he was dissatisfied? Why he was again thinking that my learning is not complete? So that is the places why Vedavyas is being created through that process. So that goes with all scientific community or scientists. So every vehicle you design, again you redesign that and you modify it and bring a new vehicle. Every food you cook, that you modify and bring it to more accuracy, more tastier, many things. So that process of learning is the basic foundation of our human being. But it doesn't reflect in our life in 100%, and we reflect only 10%, 20%, and we are satisfied with that. So why all these philosophical things I am telling here? The reason is adjustment is such a process. It is a process. It is not a text. It is not a theory. It is not a subject. It is a process. So adjustments we are doing in the option strategy are of many types. But broadly, now these 5 types I will be explaining. More advanced, I will go these 3 types in some future time. So as I said to you, this is our model strategy. We are buying a future, we are buying a put option, selling a call option of daily expiry. We have 2 possibilities. After we initiate the strategy, the price will maintain above 96,000, which is our put strike, or it can fall below 96,000. Say if first adjustment is called profit capping. So what happens? Earned profit, we will cap it. Suppose we have earned $100, we will cap it. So this $100 will retain in our hand, and anything comes after that, it will be a small. So we will be waiting for one more opportunity when it will be favorable to us. Say above strategy, we are spending 3689 time value in put option buy and receiving 553 time value initially by selling this call option, and the price remain in this range of 96,000 to 97,000 for 7 days, and every day if we are going to get some 500 points gain in by selling that 97,000 call. So this, if we are selling this 97,000 call by 97,000 call by selling this process, every day average 500 points. So if we are getting, then what happened? 7 days after, we'll be recovering the cost of this put option, which we have spent 3,689. I am telling 500 average, 5 into 7, 3,500. Do not say that, no, this is 3,689, 100 rupees difference. So just motamoti accept it, 7 days we are recovering that. So once we recover this put options value after 7 days, the existing put option will be trading at some value. It may be 1,500, maybe 1,000 points, maybe 500 points. So whatever we have, the put option is having, that is the gain. So that is the gain. So we have already earned this much of put options value we have earned. So now question comes, how we protect that? So we have recovered these things. Net profit we have come. So cost is totally recovered. Net profit we have come. So we will be protecting this thing. So what we have to do? Now put option value completely we have recovered, and price is 96 to 97. So we are expecting 7 days it is having a consolidation in this band. We have already recovered. Maybe the uptrend is not setting in, or the prices may not go up. So let us protect this 3,500 whatever we have received. Let us protect. So what we will be doing? We will be selling on ITM call options of daily expiry. preferably less than the strike of the 96,000. You can say 96,000 also. So now it is 96 above. The future is 96 above. After 7 days, whatever the profit we have earned, because 7 days I am telling 3,500 points we have earned. So which is 100% recovery of our put options value. But put options having some value, and future is still at 96,000 to 97,000. In this zone future is trading, and profit we are going to cap. So I am telling you, you sell some 96,000 call option of weekly, or you can sell one 95,000 call option of weekly. So which will give me a 3,500 premium, or some other strike which is just giving me 3,500 earned premium. Whatever I have earned so far, I am going to cap it, but still participate in the market. So 3,500 put option still there. I am still holding the put, still holding the future. I am just changing my style. Instead of selling the 97,000 call option again, I am selling 95,000, 96,000 or 94,000, any of these lower strike call options to protect this 3,500 points of earned profit. So this process is known as the profit capping. So when to release this capping, or why we are doing this profit capping? While doing this profit capping, we are convinced that the trend we are experiencing now is arriving at the end cycle, and the new opportunity will emerge after some corrections. That is our conviction. That is our belief. That is our thought. So this is what we are saying here. So what we are saying here, maybe at the end of this trend, we have 3,500 points we have already gained. We want to cap it. We want to protect it. We want to restrict it. So that is what we are doing in this. So profit capping method is this. When to release, so we will be keeping this particular strategy and wait for some corrections to happen. Once the correction happens, we have a put. So we have already sold the ITM. So out of this 3,500, whatever earned profit we are capping it. So out of 3,500, we will not get 100%. If 80-90% we get it. So 2,500 points we gain through the process of correction, we can come out. So here again I take you to the first part, what I have told you. Do not think this is the only one way. So as I said to you, this is one of the way, but this is not the only one way. This is one of the way, not the only one way. So instead of selling a ITM call option, what are other processes? We can take a put option of a head strike and keep selling the OTM call option again. We can take some in the money put option, say 98,000, 99,000 put option, and keep selling some OTM call option again. That is the second way. So for this strategy, this is the way. If you have other strategies, other way will be there. The basic theme of profit capping is whatever earned profit is there, what is the process that we should protect that profit, what we have already earned, and wait for a favorable situation which may or may not come for us. If the situation doesn't come for another 5 days, 6 days, why to wait? So we'll again change our plans and move to a thing where we can again participate in the market and still do not sacrifice this thing. So this is one of the way. Coming to profit expanding things. So we earned certain things. We are slightly more risk taker.